Hi, this is PR Sundar. Welcome to Post Market Report sponsored by Delta.exchange, a leading options trading platform for cryptocurrencies. Today is the 6th straight day of green candle in Nifty, but today it is different from the last 5 days. The last 5 days, markets moving continuously higher in one direction. But today it is 2 direction, 3 direction, 4 direction. Market opened higher than what gifts Nifty indicated, then fell nearly 100 points. And you may remember, for the last few months that has been the trend. Intraday 80 to 100 point fall almost on a day-to-day basis, then recovers on a positional basis, 200 point. I still remember a month before last month, 18,200 to 18,400, it was trading very violently. The same way last month it was between 18,650 to 18,850 or 18,700 to 900 we can say, was trading with violently. And so on a positional basis 200 point violent move, on intraday basis 80 to 100 point fall happened many times. And I've been saying for the last 2 months, so any fall of 80 to 100 point, that is the time to take long positions if at all you are interested. So the same thing has happened. Today Nifty fell about 97 points. Nifty future I was looking, it fell 97 points from intraday high to intraday low, then again shot up more than 130 points. And again fell 50-60 point, then again some recovery. So it was a huge volatile. So I've been saying that the markets need to consolidate at least for a day or two, and that has actually happened today. And this consolidation happened with huge volatility. So we were on both the sides, and some Bajaj Finance came out with some monthly business outlook. Something nowadays, every month people give some outlook, how much loan was given, this and that. I think that figure was very impressive. So because of that, Bajaj Finance and Bajaj Finserv shot up like anything. And I still remember in the last bull run, Bajaj Finance went above 8,000. Then from there, it came down to 5,500. And now from 5,500, now it's almost 8,000. So that is such a huge volatile stock. And not only that, today on one side Bajaj Finance and Bajaj Finserv did extremely well, and HDFC Bank as usual was very volatile. And I don't know what happened, Eicher Motor fell like anything, and the auto index fell for the second straight day. But however, Hero MotoCorp, that's one of my favorite stock, because I think by this time I may be a good trader, but I'm not a good investor. I like only the high dividend yield stocks. So Hero MotoCorp is one of the few stocks in Nifty 50 which offers good dividend yield. And there was some income tax rate, so that time Hero MotoCorp went to 2,200. I think in fact it broke 2,200. And now it is above 3,000 after a long time. But still remember, auto stocks are recovering, but still they are in a long-term bear market. You still remember 2018, I think, if I am not wrong, Hero MotoCorp high was 3,500 and Maruti high was 10,000. And still they have not recovered after 5-6 years. So anyway, that is about Hero MotoCorp. But considering the good dividend yield, and this Hero MotoCorp performance in the last few months is very impressive. So today people try to manage, they don't want breakaway or runaway rally. So when the financials went up, Reliance came under profit booking. So the profit booking continued until the end of the day, but markets was just too volatile. And I tell you how volatile was this. Market keep on moving higher, all call prices shooting up, put premiums did not come down at all. And then after that market started crashing, market kept on falling, and put premiums kept on moving higher, but call premiums did not come down. And in fact, last week I came out with a video, in a low VIX environment, it does not make sense to sell put option if you are bullish, rather you should do put calendar. And today at some point of time I was looking at a put calendar which I suggested in the last video, that was giving about 50-60 rupees profit, while the naked put options are hardly giving 1 rupee, 2 rupee profit. So that is the trick. When the VIX goes higher, put premiums. So look at the fantastically high premiums today. I was looking at some point of time, Bank Nifty was trading above 45,000, around 45,300, 400 like that. A 38,000 put option, that is more than 7,000 point away. And for day after tomorrow expiry, just 2 days, that was trading around 8 rupees, 9 rupees. And how can Bank Nifty fall 7,000 point in 2 trading sessions? That is 3,500 point on each trading session. And that is next to impossible. That has never happened. But still, the premiums are so high. And when Nifty is touching the day's high, a Nifty future touched 19,500. That was the day's high. At that point of time, 18,800 put option is going up, and it was trading above 8 rupees. And closing it was only 4 rupees. Now, when I posted this in social media, some people commented, "No, sir, the people are buying far out of the money options for hedging." That is actually not correct. And I tell you, let us say if you are selling a 19,000 put option and you buy for hedging 18,500 put option, 500 point away, you will get some margin benefit. And I'll tell you how the margin works. Okay, the margin, approximate margin for Nifty is 75,000 rupees span margin plus 20,000 rupees exposure margin. I'm talking about the rough figure. 75,000 span margin, 20,000 is the exposure margin. So that is if you do naked. But if you buy the hedge, the exposure margin remains the same, that is 20,000 only. Then the span margin, it will not be 75,000, it will be equal to the maximum risk. Suppose if you buy a put option 500 point away, so your maximum loss is 500. So 500 into 50 is only 500 into 50 is 25,000. So 25,000, 75,000 span margin will be changed to 25,000 because your maximum risk is 25,000. So 25,000 plus exposure margin of 20,000. So your margin will be 45,000 instead of 95,000. Just imagine if you buy option 2,000 point away. So 2,000 point away, 2,000 into 50 is 1 lakh rupees. So why you want to pay 1 lakh rupees plus exposure margin? Rather you sell naked one and pay only 75,000 plus 20,000. So people who are buying 1,500 point away in Nifty or a Bank Nifty, you can just calculate as it is, because now the Bank Nifty lot size has changed and this and that. So anything more than 1,500 point away you buy for the hedging, you don't get any margin benefit. So definitely today's price action is not because of hedging or margin benefit. You don't get even the 17,000 put option, which is 2,000 point away. So you don't get any margin benefit, but still they were trading at very good prices. So anyway, when the VIX shoots up, all these things can happen. So that is why I conveniently told you, if you are bullish, don't sell put option, do put calendar, right? So India VIX up for second day, and today it was just terrible. And at the end of the day, FIIs have bought for 2,100 crore, domestic institutions have sold for roughly about 800 crore. So still institutional flow is positive, net positive of more than 1,000 crore. I think this rally going to stay here, but although with huge volatility. So positive momentum continues, and looking at the open interest, 19,300 put option as the highest open interest in weekly options. We just have only 2 trading sessions, and today US market is closed, so therefore tomorrow you can't expect any big gap up, big gap down. But I really don't know why a gift Nifty is showing roughly about 80-point gap up. I suspect there is something technical snag or something. I don't think that can be true. So therefore, just only one more day, so that makes sense. So 19,300 put option as the highest open interest, but 19,400 put option also added good amount of open interest today in weekly options. And monthly options is the same thing. Even in monthly option, 19,400 put option added a good amount of open interest. So I think people are becoming too bullish, and sometimes when everybody become too bullish, then only the correction sets in. So this is a non-stop rally from 16,800 to 19,400. So we have to see what is going to happen. But if market consolidate for a few days, then there is nothing to worry. But vertical up move is where, when the market reverses, the pain will be more. And however, because of this huge spike in the premiums, when market goes higher, call premium shoot up, put doesn't come down. So this makes intraday players very, very, very difficult situation. I think today, like 5 rupee option went to 100 rupees, from 100 rupees again came to 5 rupees, especially in Fin Nifty. So I think today most of the intraday players who are playing in Fin Nifty or Bank Nifty, they have lost heavily. So in fact, the market has been very, very brutal to these people since May. And welcome to the bull market. And I always say traders can make money easily in bear market, but it will be very difficult for traders to make money in bull market. That's because market can swing both the sides very, very hugely. Because when market goes up, a lot of people, some of them, they may come and book the profit, and the market falls drastically. Then another set of people come and buy, and today that's what you have seen, huge swing on both the sides. So it is not the time to do intraday, or if you do intraday, you do with a strict stop loss. So otherwise that's going to be very, very painful. So hope you enjoyed watching this video. Thank you for watching.